Let me ask a stupid question. Can a financial planner make you wealthy? And if so, how?
Yes, we can make you wealthy.
This is Mogobe Nuggets of Wisdom podcast. We enthuse, we energize, we inspire, and we empower entrepreneurs and entrepreneurs of all stripes in BW and beyond. Hello, dear viewer and listener. It is my great pleasure to once again present to you another exciting episode of Mogobe Nuggets of Wisdom podcast. Stay with us. This one you're going to love, guys. We're going to talk about financial planning. We're going to talk about financial literacy and all things financial from a South African point of view. Why am I saying that? I'm saying that because my guest is being interviewed right here from Sandton, Johannesburg, South Africa. She's someone who's grown here in South Africa, born and bred, and she's a specialist in this area. But before I introduce her, let me ask you just to strike the subscribe button, please. If you haven't done so already, please. I've discovered that only about 33% of my viewers have actually hit the subscribe button, which means 67% of you watch the Nuggets without subscribing. So do the honorable thing. Don't be among the 67%, be among the 33% and hit the subscribe button. Not forgetting to strike the notification bell as well as the the like button. But still on the little bit of housekeeping, I have my book here. I think it's visible from another angle. Nuggets of Grit, from the cattle post to serial entrepreneurship. The story of how I started from humble beginnings and how I got into where I am. I still feel I haven't arrived. I still feel I'm getting started, but nevertheless, there's a story to tell. And it's only $350. It's available from Exclusive Books. It's also available from our building, which is Mogobe Plaza on the first floor. So do get hold of it. And if you're interested in any of our mentorship programs, you can call us on 397-1368. All that having been said, let me introduce my guest, Elizabeth Hove, or Hove. Am I saying it right?
You're saying it right, yes.
Okay,
Thank you so much.
Welcome to the studio here in Sandton, our makeshift studio.
Thank you for having me. I'm so grateful, and it's an honor to be here and to meet you as well.
It is an honor for me as well. Would you care to introduce yourself in terms of who you are, if somebody were to ask?
Mm-hmm. My name is Elizabeth Guguletu Machaba Hove.
Yeah.
I must put that there because I love my second name.
Yes.
People always say, is Elizabeth actually your first name or your second name? Because they think I'm using the English name. No, that's how it was. I'm a financial advisor. You can call me financial planner. And just to go back before I got into financial planning, I was born in Zimbabwe and born in a city called Chinhoyi, and then I was raised in Harare. Raised by my mom. Mom and dad were separated when I was very, very young. So that I would say that had an impact on me somehow. Because and then I was also actually raised by my grandmother going forward into my
That's the story of
primary.
my life. My parents reunited when I was 10.
Wow.
So
at least they reunited.
Yeah.
So that now I was raised by my grandmother and also my aunt. So it's sort of like a community of people, raising a child, and that had a huge impact on me as well. My mom moved to the UK. That's where she still resides now. So I think growing up and going to school, I did my primary in Zimbabwe. I finished my primary, and I just kept on thinking, I want to go to my mom, just having this desire and the yearning to want to go and be with her because I was a mommy's girl. So I wanted to always be around my mom. So I actually managed to...
She left for the UK when you were how old?
How old was I? I just still remember how old my sister was. I was, I think...
Teenager?
No, I hadn't
toddler?
got into the teenage years, no. I was still in my primary. I don't quite remember how old I was, yes. But I remember that I joined there when I was 14.
Okay.
Yes, and then I continued with my high school from there. So I did my whole high school education in the UK, and then from then I went straight into working because I didn't really know what I wanted to do just yet. I wanted to go to university, but because of cost, etc., I just thought, let me go into working.
Let's talk about your professional training. What was it? The academic part?
The academic part in terms of the university. Okay, so I did BCom financial planning. I started with BCom accounting, which showed me flames for that one semester. It was very interesting, showed me a lot about myself, but I realized that besides it being challenging, I also realized that you need to get into what you feel like this is my passion, or you have a strong desire for. Actually, if I can just go back into before getting into financial planning, I remember when I was still working, I would think to myself, what is it that I should do? I wanted to have this sense of purpose and to really do something that will be fulfilling to me. Then I would pray. I'm a Christian, so I would pray to God and ask, what is that I'm supposed to do? So that's actually how I got into this industry of financial planning. And now I did BCom financial planning, then I went on to do postgrad financial planning, which is equivalent to an honors degree.
Okay.
Yes.
What actually is financial planning, which is what you do now?
Yeah.
What does the profession entail?
The profession is very, when you just say financial planning, even when I told my relatives this is what I'm doing or what I want to get into, they were like, what is that? We don't really, we didn't grow up knowing these terms. So I got into it because of personal experiences. So now understanding that, we all need some form of financial education, because we all deal with money on a daily basis. Whether you feel like the money is enough or not enough, we still get money and we transact. So financial planning is basically helping individuals to grow their wealth, long-term wealth. Yes, we want to enjoy the fruits of our labor today, but also we want to build a legacy for those around us and just to be able to live very comfortably and live the lifestyle that we want.
Yeah.
So financial planning is about creating wealth.
How important is that as a field or as a profession? In other words, what's the impact of financial planner in society?
Wow, it's huge. And just thinking about that, it's actually something, the passion for me, it comes from there because I see that people really need financial literacy as well. It's not just understanding that, okay, I can get a financial planner when I have money, but from where you are, it's very important. Hence why we touch on graduate professionals, because from the time you get your first job, you need to understand how to manage that salary on your first month. How do I pay my bills now that I'm paying for rent? I'm getting all these other things that I must do with my money for it to be able to last you for the whole month. So I think just money management and understanding how to, make what you have work for you and last longer.
Yes.
Yes.
Did you yourself do your own financial planning for yourself?
Interesting. Imagine a doctor being a doctor themselves.
I'm asking the question. Yeah.
That's very interesting. Yes, actually, because I use a doctor being a doctor for themselves.
Yeah.
Not the same, really.
Yeah.
You can do. I would say you can, but I got my other colleague to do my financial planning for me.
Just to check what you've decided, to
Yes,
verify maybe.
Exactly.
Because you have the skills.
Exactly. But just the management of it, like budgeting, saving, those are things that, I can do on my own.
Yeah.
Yes.
Now, as a profession, is it the same as, is it a degree qualification level now, or is simply just a professional certification?
It is a degree qualification. So there's a board called FPI. So they're the ones that regulate the exams and everything that
Financial
we do.
Planning Institute.
Yes.
Mm-hmm.
So you first of all have to get a BCom in. It can be a different degree. It doesn't necessarily have to be in financial planning, and then postgrad, and then you go on to do your CFP, that is Certified Financial Planner. So that's the board exam. So you have to go through that path. Yes.
Let me ask a stupid question. Can a financial planner make you wealthy? And if so, how?
Yes, we can make you wealthy.
Yeah.
Because how, you might ask, how does a financial planner make you wealthy? As I mentioned earlier, it's about knowing how to manage the money that you have and actually realizing that it can last you longer. Because when you have a budget, you're saving, you're investing. So those are the things that we touch on. Creating your wealth, you have to start with investing. So once you've done your budget, you actually realize that I have enough money to stretch me even to do a lot more. So with that, you're using compounding interest and you're earning. Your money is working for you while you're sitting. Yes.
And financial literacy. What is the state of financial literacy in South Africa? Or what's the level?
Percentage-wise?
No, as far as you can, whichever metric you want to use.
Yes. So what I've realized just from interacting with the clients that I've had so far, you can see that we need to educate as many people as we can. Just from where I am, I don't have to wait for a very big platform. I can use the means that I have. When we look at, if I can just go back to how I grew up, you can see that when someone attains a certain level of success, they're earning a certain amount of money. It's now way beyond, I can just buy a car and a house. I can do a lot more. But then having that mindset to say, let me preserve what I have and actually build a lot more, something that will be sustainable for the future, for my children or grandchildren. So having that mindset of building and creating my wealth from what I have, now that I'm able to earn more, it's very scarce. And I can see from where I grew up in Zimbabwe and also here, that it's something we need to really educate as many people as we can to know how to manage their money and to stretch it more and, create the wealth that they
Let's
desire.
say you get 10,000 rands every month. What can you really do with that money in a typical situation to make sure that you take the best practices and apply?
The nice experience I've had is that I've met all kinds of people. You meet people who are earning 100K a month, and you also meet people who are earning 10,000 or 20,000 a month. But it just depends on the life stage that the person is at. So let's say an individual is earning that amount. They may not have children, or they're not, whatever the life stage is. Maybe they're just coming out of university. This is your first money, you're getting 10,000. So your priorities may not be, or your expenses may not be as much. So you're paying for a few things. So managing that, actually you have to watch, as I mentioned, the budgeting. So if you can budget well, paying for your fixed expenses. Now I'm going to get a bit technical. Your fixed expenses.
Is
so
that
those
rent?
are the things. Yes.
What are fixed expenses?
So like your rent, groceries, because you definitely need to eat. So all the things that you require on a month-to-month basis. So you put that aside, that money. Let's say it's about 6,000. So you've got 4,000. That is, money that you can work around to see. Maybe you can still add on other things like a few groceries here and there, but you can actually spare 500 rands to say, I'm going to save this money or I'm going to invest it. And that's how you do that. So imagine if you're saving 500 rand every month on a year to year and it's growing with interest, you do so much more. So that's how you create.
But the
that
banks
wealth.
give you very little. Where is it going to grow and compound these days?
It's growing.
Yeah, but where? Which in a savings account, or is
Savings account definitely will not give you the interest that you require. So we go into a unit trust. So you can invest in a unit trust if you're starting with a small amount. But if you want to...
What kind of unit trust?
So we have different ones. So different platforms, they perform differently. So in terms of the interest, it's a bit higher than what the bank will offer. So let's say maybe you go into a unit trust that gives you about 8% interest on that money.
You can
Could
get
be
them here in
9%.
South Africa?
Yes, you can.
Typically it's 8%? Or
Typically 8%, it can be more. So it depends also on the amount and also how long you're investing for, depending on the risk profile of the person. So that is according to the how long you're going to invest for.
So what else? What else can you do with that 10,000?
I would say start with saving first. So saving.
What percentage of the 10th should be saved?
Percentage now, that would depend on you as an individual. How much do you want to
Yeah,
enjoy
we're talking
that
about
money?
a typical person, an average man in the street. What's ideal for them? Or an average, shall I say, entrepreneur or entrepreneur?
I would say from that amount, save at least 1,000. That is the minimum. If you can now stretch it to 2,000, that is the best thing.
So 10%.
If you're earning 10%,
That
yes.
sounds like the advice from The Richest Man in Babylon by Klassen.
But you must pay your tithe first as
yeah,
well.
yeah.
You pay your tithe, then you can do.
Why
your
do you
saving
believe the
and
tithe
invest.
comes first?
Because that is one of the most important things, if we're talking about now creating wealth the long term and the godly way. As my pastor always shares, Pastor Dr. Joylyn, that your tithe is very important. So you're basically saying, God, this money, this 10,000 I've got, it belongs to you. The 10% belongs to you because it is required according to the Bible, and then it preserves the rest of your money.
So 1,000 goes to God, and then the other 1,000 goes into a unit trust.
Yes.
What happens to the
2,000 left?
No,
The
the 8,000 left.
the 8,000, that's where you're using that money to pay your rent, to pay your food, your groceries,
But
all
your
the
rent
other
is only
things.
2,000. You've got one room somewhere.
2,000.
That's too little.
It's too little.
So it's
So,
what? I don't know the
rent-
rents here in
Let's
Joburg.
say roughly for a single person, maybe 4,000.
3,000.
Yes.
Okay, let's go through it. 3,000 for rent,
3,000.
1,000 for tithing, 1,000 for unit trust.
Yes.
You still have the remaining 5,
5.
and that's for.
That's for now. Maybe groceries actually it cost a bit more. Groceries now, some
You
people
can't
want
survive on 5,000 the whole month.
You can, but
It's gonna be hard.
What I've realized is that when we do the budget, you actually realize that the person is doing a lot more with their money, and they're left with almost nothing. But then when we actually restructure and say, actually, if you are paying for, you're spending a lot of money swiping and you're going out to eat a lot, takeouts and stuff, you can actually save that money. So include that into your groceries. So if you think you're spending 2,000 or 1,500 on your groceries, make it 2,000. Then you buy things that will last you for the whole month, and then you're not feeling the need to go out and buying takeaway. Then that money can actually stretch you a bit longer.
Let's talk a little bit about black tax, because we as Africans, for those who don't know, feel obligated to take care of our families back home, and it's culturally embedded. It's part of Ubuntu. It's part of Botu. It's expected.
Yes.
How do we handle black tax? What do financial planners like you advise?
Interesting enough, we actually include it in the budgeting. So what I usually go through with my clients is I ask them, tell me everything. I have what I ask them, the questions I ask them, but I also ask, tell me everything that you're paying for. Then they remember, oh, actually, I send money to my niece. I send money to my mom. So those things I included into their budget, because as much as you might think it's just money I send on the side, it's taking away from your whole salary, that 20,000 or that 10,000 that you're earning. So we include it as part of the budget, because it's very important. I understand, our parents have taken care of us. Now maybe they are retired. I still have to send, a little bit of something to my mom or my dad to make sure that they're able to survive. So it's very important. We include it as part of the budgeting as well.
Yeah.
Yes.
I want to go back to financial literacy or financial education again. How are you as financial planners addressing that? Because my view, and correct me if I'm wrong, is that you can do all the budgeting in the world, but if you're not financially literate or have the basic minimum education, it will still go wrong.
Definitely. It's hence my passion in financial literacy. I saw that a lot of advisors, and this is something I'm also realizing, that some people are getting advice from just being sold a policy. So they're told by a certain company, you need a policy, you need a life cover, you needed this. So that person did not go through the process of educating the person to say, this is why you will need life cover, this is why you need retirement planning, because when you retire, you still need to live. You may not be earning money from your company anymore, but you still need an income. And that's what retirement planning does for you. So it is very important. It's something that I've also started doing, going to universities. And recently I was invited to a company that helps entrepreneurs to ladies or females who are running their businesses, to learn more about running their businesses efficiently and managing their finances. So it is something that I take very seriously. Not many financial planners are doing it, unfortunately. They're just going client to client and doing what they need to do. But I think there's a bigger responsibility on us to make sure that the people we're advising, we equip them with the right information. I've had clients that come to me and they may not take out anything, they may not be ready to invest or plan for their retirement at the time, but I equip them with enough information that when they go out, they share with another person and they refer them to me to say, this is what Liz actually said to me and this is what it's helping me, and they become my client as well. Yes.
In terms of that very thing, what do you think are the biggest misconceptions or myths around financial literacy that you are finding among people?
I would say, going to financial planning side of things, people think financial planning is for the wealthy. And that is the biggest myth ever. So educating them on that it's not about you. For you to actually have more money, you are supposed to have planned to have that more money or to be wealthy. So it's not you don't have to come to an advisor because you now feel you have that much money. We can help you to budget that money or to invest that money and grow it. So that is something that I've realized, that it is out there with a lot of people, that they think it's for the wealthy. Therefore, the literacy part, I don't need to know about it. I don't need to understand it. Just leave me with what I have and manage what I have. Yes.
Any other myths? We're here to debunk myths, aren't we? We're going to debunk a few myths.
I hadn't thought on those ones in detail, but that's the one I've noticed.
What about the idea that money is the root of all evil, and that there's really no need to bother about money? After all, we are guaranteed a very cozy place in heaven.
Very interesting. I'll give an example. Let's say in regards to that, someone who is, because when it comes to money, it's also about my pastor always shares that you attract money. You see, so your mindset is very important. And some people chase money away because of the way they think. So let's say someone who's just won lottery, was used to earning a certain amount of money, let's say 20,000, they've won R1 million. That is life transforming, that amount of money. So then, because they don't have the knowledge of how to manage it well, they were used to managing at 20,000 every month. Now it's this huge amount. They can blow it and go back to 20,000. Because they were so used to that amount of money. So money is not the root of all evil.
It's not. It's the love of money.
It's the love of money and how you attain it. Yes.
And of course, on that point, the book of Proverbs says that a fool and his money are soon parted.
See.
Have you experienced that? That some people are somewhat foolish towards the way they approach money?
Definitely. It is that thing I said, that you attract money as well with the way that you think and how you've been raised and how you associated money. So you can actually chase it away as much as you can have more of it. Hence why I mentioned about the wealthy or those who don't have a lot thinking that it's for the wealthy. It's actually those who may have a lot of money may not know how to manage it well, and they find themselves in the same situation of being on zero every month because they're not understanding how to go about it.
There's this organization called PPS. Can you tell us about it?
That's my company. That's the company I work for, should I say. PPS for professionals. It focuses on graduate professionals. So all the individuals who are just finishing university and now you're getting into your very nice job. You're a doctor, you're a lawyer, you're an architect. Those are those are our clientele, the people that we focus on. So we give them financial advice from that time when they're just starting their jobs.
Do you believe they're vulnerable to misinformation or to doing things wrong?
I would say so.
Why?
Yes. Because now you are not really earning this amount of money. You're going into this position. You all of a sudden your payslip says 30,000. It's very exciting, and many people have gotten into debt at such a young age because I'm earning 30,000 now. I can afford to take out a car and pay 10,000 every month on the premium on it, which is not the best idea. Those are like the alarm bells that will ring in my head as a financial planner. I'm like, no, don't do that. So they are very vulnerable. And also we go back to the black tax situation. Now they feel like that need to go and give back to the family, which is very important, but it also affects them as well. So just having the guidance on how to maneuver that situation is very important, yes.
Do you advise across races, across nationalities? And if so, what are you finding are the main differences in terms of attitude towards money among the nationalities?
Very interesting. You want me to go there?
Yeah, if you don't mind.
No problem.
We have to call a spade a spade.
Now that we've touched on black tax, now I have to go into this, but that's fine. I have noticed that there is a bit of a difference. How we are raised is very important, and how we are introduced to money. If you're growing up in a house where there was a lot of lack, you're always constantly thinking that what I have, I might lose it. So that mentality will affect how you handle money going forward. And then yet some people I've seen that they're so used to certain things. So even buying or paying for something, they don't really feel like, oh, okay, it's just 1,000 premium. That's no problem. And then someone is saying, 1,000? No. Can we bring it down to 500? Because as much as they might have a lot, they still have that sense of, I might lose it and go back to zero again. So that's what I'm finding, that it's a bit different, and it's quite sad, and hence the financial literacy part, that we need to really educate people to now start changing our generation, that you can enjoy your money, you can live abundantly, just change the mindset, and then everything else will fall into place.
So I still want us to go further on the mentality.
Yes.
Suppose that graduate gets between 30 and 40,000 and he's from the race that was deprived in the past. What are the do's and don'ts, and what advice are you giving to them to avoid disaster,
Definitely. We don't want disasters. I would say, as you're coming into employment and you're earning that very nice money, first thing you must do is get a financial advisor. That's the number one thing. Because on your own, unless you're very good at managing your money, which most people, I've seen that a lot of young people are very good at it now, creating their own budgets. But also having a financial advisor will help you to know that just keeping your money in a savings account will not earn you that wealth that you want. Because ideally you'd want to buy a house, you want to buy a car. That will not really get you there fast enough as compared to when you're saving. So with all the priorities that you now have and people that you have to take care of still, and also your own needs, because you're supposed to enjoy the fruits of your labor, isn't it? So as you have this job, enjoy it, but also think of how can I create and build wealth. And in terms of that, it's just trying to change the mindset of, we didn't have. Now that I have, let me now see what I can do. I can do more, because it goes to the idea of having a sense of purpose. when you understand who you are and the community and the society you're serving and the things that you're doing. So your job is actually a means to an end. Your job is supposed to help you to get to do the things that God has called you to do ideally. So it's just a means to an end and helping you to get there. Yes.
And I want you to blow your own trumpet here in terms of any before and after stories, any success stories, without necessarily mentioning names.
I've done great things.
Yes.
I really enjoy what I do, and I enjoy meeting different kinds of people. Some of the people that I have met, one of my clients actually, we spoke, a young client, and earning very nice money. And what I notice in terms of the success is that I equip my clients with enough information. So he came to me, we spoke, we discussed all his financial situation that was going on at the time, and he took my advice. It's very nice and fulfilling when someone is saying, you can just see that they are with you with what you're saying. And he was able to adopt that, and we took all the policies that he needed. Now
What
it's all
was your
set
advice that he took?
Retirement planning. Many young people think, I don't need to think about retirement at this time. I'm still young. I'm only 25. I retire at 60 or at 55. It's okay, So I was very actually inspired to see that he wanted to listen to what I had to say. So we took out a retirement plan, life cover, investment plan as well. So those are the things that I usually recommend to all our young people who are in the industry or whatever industry they are in. Yes, to take out those policies, and that's how you grow your wealth, because retirement planning, you're actually creating your own wealth for the long term. Yeah.
And what's the situation like for that person?
Very good, actually. So anything that he does, he actually comes to me. He moved jobs, and he said, I've moved my job now. What do I do with this pension fund that they'd set up for me? So everything that he does, and every time that life changes, he comes to me. And that's what an advisor is supposed to do, to make sure that we move with you and we grow with you. And when he gets married, we're also planning, saving for lobola, So those are the things that interest me, and it's real life, It's helping someone to build their life from the ground up, going up into their, building their own family, saving for their children's education.
So the person is about to become a multimillionaire because of your advice.
We'll get there.
Yeah, he's getting there.
Yes,
Okay.
Definitely.
All right. For a lot of entrepreneurs who are watching, they have what I call unpredictable income streams. So they find themselves unable to attract certain loans because of lack of predictability of income. Either someone is a small merchant in the street, or they are a tenderpreneur. They do tenders, and they don't come regularly. What advice are there? Special tailor-made packages for people like that with unpredictable income? Sometimes it comes heavy, sometimes it comes trickling.
Yes, definitely. We cater for that. So we deal with personal financial planning and business financial planning as well. We cater for entrepreneurs who are running their businesses. Income is fluctuating every month. It was very good last month. This month, not so great. So we make sure that as the income is coming, that time when it's there, let's plan for it well. That's when we must save, put all that extra income away, because when now the month when business is not going so well, you can now go into your investment and, take out something that for you to sustain yourself. Yes. Yeah, so we do have that as well for entrepreneurs.
Yeah, but banks will not give them loans. What do they do?
It's a very interesting one. The good thing is I'm not with a bank, so PPS for professionals is just purely for financial planning services.
Yeah.
Yes. So looking at how, in terms of borrowing money and stuff, there's a lot that comes into it. Your credit score, and the bank will say, no, we can't give you because your credit score is too low. So we guide an individual on how to build up their credit scores or to be able to get money from the bank.
Yeah, someone watching may not know a credit score and how it works, and they may not know how to improve it. Can you teach us a little bit there?
Okay. So with credit score is basically the bank saying we want to know your ability to pay us back. Are you able to pay us back from what you're earning? So make sure that your account is not on minus, because they want to track that. That's what builds up your credit score. So make sure that whatever debt that you're in, if you have a credit card, you're paying that credit on time and you're not staying at a minus for too long. Then it goes up, and then they can give you the...
What are the numbers there? What it ranges from what to what? When is it bad? When is number what? It's good. When is number what?
I would say from the banking side, I use the BRI. So if it's...
What's that?
The borrowing something.
Yeah,
the abbreviation is not there.
Yeah.
So if it's at 7, very good. You can...
7 out of? Is it a percentage or just a number?
It's just a number.
7 out
so
of 10?
So we don't want it to be lower than 5.
Uh-huh.
Yeah, but 7 is the best one. You can get lending from any bank when you have a 7. Between 6 or 7, but 7 is the premium number that we're looking for.
Yeah.
Yes.
So when you have a good credit score, it's 7 or more?
Or more.
Okay.
It can go up to 9.
Up to 9?
Yes.
Okay. But now suppose your credit score is at 3. How do you go about raising it to 6 or 7?
So that means now you're not paying all the things that you're supposed to be paying on time. So what we would advise is that make sure that this debt that you're in or the amount that you're owing, let's find a way of balancing. Because what I found is with some of my clients, if say there's debt or there's a credit, the money that they're owing on credit, but then they have some money in their investment account or in their savings account. Why are you keeping money in your savings account? You can actually use that money to pay off some of the debt, and that reduces that helps you to now up the credit score.
Okay.
Yes.
And there are times when the credit bureaus or the credit companies get it wrong. Do you help in correcting someone's score and ensuring that it's properly communicated and so on?
Unfortunately, that will be on the banking side, like the banker will assist. So my part would just be to help this individual to get to a better credit score. Yes.
Okay.
Yeah.
Now, this awareness in terms of raising awareness for the need for financial planners, what are you doing as an industry to raise awareness? Are there any kind of campaigns you're undertaking? And do you participate in any radio programs? Of course, coming to Mogobe Nuggets of Wisdom is a good start.
Yes.
But what are you doing to raise awareness?
In terms of the company that I'm with currently, so we go to universities and we also go to different organizations and help, especially the younger ones. Even now we have an initiative to go to high schools, because we realize that by the time you catch as an individual at university, we want to now catch them earlier than that and educate them on what financial planning is about and financial literacy. So we have initiatives that we are starting as a company. As a whole, I believe that other companies are also taking some initiatives, but I think it's something that really needs to be touched on a bigger scale.
You would spend the whole day there teaching youngsters,
Yes.
like classes and so on?
Yes.
Okay.
So we pick a grade. If it's a certain grade, then we educate them. And also if it's first years, second years, or third years, then we educate them like that.
Would it not be better to introduce financial literacy into the curriculum?
That would be amazing.
What is being done about that? Because even Kiyosaki laments that it's not happening in America, it's not happening in Botswana.
Exactly.
It's not happening here.
We really
what are
need
we going to? What are we going to do?
I'm sure that is a movement I'm going to start, and that is my desire, to be able to touch on all of those things and introduce it into the curriculum, because it is very important, and it's left out. You know, when someone gets a job, the employer says, now that you're here, forget everything you learned in university. I'll show you how to make money, or I'll show you how to grow a business. So now you learn it in practical terms when you now start working, but it could have been introduced at an earlier stage.
Yeah. There are those who say that the capitalist system is specifically designed to create workers and not to create job providers, and therefore it's a conspiracy to keep it like this. Do you believe that, or is there any evidence to support that?
I would say from what I've seen, in some way it is true, because, you know, you sort of like led to just go month to month, stay in this system that we've built and work every day, 9 to 5, and you're not really thinking about running your own business.
It's 8 to 5.
Or 8 to 5. It's even earlier. So, you don't have time to now thinking about all your passions and how to run your own business. So that's why some people end up quitting the job and then saying, you know what, I'm going to go 100% into this thing.
Yeah.
Yes, because the system does not allow you to have that extra time to work on other passions.
Yeah. Is there any particular service? I know you've listed a few that you haven't covered. In other words, what are the exact services? Let's just be sure we've covered all of them that you offer.
Yes, sure. So it's investment planning, estate planning as well. So that's where we now look at how someone is married in community, out of community. Should there be a divorce? What happens? There's a lot on that actually. Retirement planning. So we start planning there's pre-retirement and post-retirement. So pre-retirement, we want to make sure that before you retire, do you have sufficient income, or will you have sufficient income at retirement age? And then, as you know, with the law, that you can't take the full amount. So let's say you've got 5 million in your investment account for retirement. There's a law, you can only take a portion of it as a lump sum, and the rest it pays you out as an annuity. So now that is supposed to sustain you for the time that you're not going to be working. And there's also investment planning, as I mentioned, life, so risk planning. So we look at life cover for an individual depending on the estate as well. So I would have done a financial needs analysis that look at every aspect of this person's planning, and then we take it from there and implementing all the planning for them.
Wow.
Yeah, so those are the services.
Yeah. Let me just pick on one, which is estate planning. Or I generally advise my mentees who are entrepreneurs that it's better to marry out of community of property. I'm curious as to what financial planners believe in that regard.
It's also the same. It's also
why?
the same.
Can you take the time to explain why it's better to marry out of community, especially if you are in business or
definitely
or in corporate?
Yes. So usually with all the business, when I go out for financial literacy programs, business people running their own businesses, it is better to now let's review how are you married, because if you're married in community of property, that means now you share together with your partner. It's 50-50. So, and if there are any debtors in their business, they can come and take everything from you. So at least, let's say I am married to my husband. My husband has his own business, and then he decides that, okay, we're married out of community of property. So the house maybe is in my name. Should the debtors come, they don't take the house. Because situations like that can happen, and it's real life, it affects a lot of families. So that separates the estates from each other. And then
you mean the debt collectors?
The debt collectors,
if they
yes.
come,
Yes.
Okay.
Yeah, so that separates that debt from, you're able to still live life and you still have a home. So it's very important for...
What do you say to those African parents who say it's unheard of once you do it separate, then you are breeding dissension, division, and disunity, and so on and so forth? What's your argument against that?
I would say, it's just about education at this point, because a lot has happened over the years, and people have seen actually that this impacts and affects a lot of families, because we're saying we are together, we are married, so two become one. So you can't separate, but then now when things happen that people do separate, it affects the whole family. Now children don't have anything, or so it affects a lot of things in the society and in a family. Yes.
Is there still a valid argument for deciding to marry in community? Is there any counter argument? I'll tell you why I'm asking you this. The idea that if you're out, you're not likely to make sure that it works at all costs, that your level of commitment will not be 120%.
Yeah.
I've heard that argument be made. And as a financial planner, what do you say?
So it's as you said that, when you marry out of community, it's almost like the families are saying, are you guys going to separate? Or maybe the partner is saying that if you're married out of community with accrual or without accrual, so that's another discussion as well. And if you're married in community, that means we are together set. But as a financial planner, I'll say that you're running a business, maybe the family is running a business, marry out of community of property. That is the right thing to do, just to avoid a lot of things that may happen later on. Should the debt collectors come, you still have your assets intact as a family, and you separate the business from your personal expenses as well.
Yeah.
Yes.
One of the big things we do on this podcast is to educate. So can you take a moment to educate us on accrual versus non-accrual?
You're really testing me today.
No, I'm just conversing for the benefit of the viewer.
Okay, so I wouldn't go into the technical part of it because it's a whole calculation. But if you're married in community or rather out of community of property, with accrual or without accrual, that means that the estate is put together, right? And then you split with accrual, you split it, and without you don't split.
Yeah.
Yes.
The way I understand it as a lawyer is that with accrual, the idea is that when you get married, say you already come with assets, separate assets. Those assets are treated separately, so you're out of community.
Yes.
But with accrual, it means everything else that accrues to the estate after the date of the marriage is in community.
Yes.
Yeah, so that's with accrual.
With accrual.
Without accrual, it means no. Basically, you carry on out of
with
community.
yours, yes.
Yeah, so I think that's the key distinction.
Yeah.
Yeah. So it's good
I
that a
agree.
lawyer has met and financial plan. We can fill each other's.
Definitely work together.
Yeah. So why is it that people like me hate retirement? I'll tell you why I'm saying this. We're saying that retirement is a scam. And let me give you an argument for it, and you can counter or agree. In the Bible, Moses started his ministry when he was 80 years old.
Yes.
And he wasn't retiring until the last day he was working. And the word retirement does not appear anywhere in the lexicon of the Tswana.
Yes.
And even in Jewish culture, the word retirement seems to come up around the mid 19th century, after the Second World War. And the idea of retirement itself kills people in the sense that if you retire, you waste away. They've done research which shows that doctors from busy hospitals actually die if they when they retire and do nothing.
Yeah.
The difference is if you retire and do something and become busy. So I make a counter argument, but I strongly believe retirement is a scam. What do you say?
So what I would say, if I were to meet you as my client, which I usually do, is that many people, when someone turns 65, which is the maximum, up to 70 maybe, you decide that I don't want to work, or rather the employer is saying they're pushing you out. But you still have this energy, you still want to do other things. I feel it's all about you deciding, after this, what is it I'm going to do? So you're retiring out of official employment, but some people still go back and do part-time. So officially you're not working. So now we have to explore what other interests do you have. So some people run their own businesses at that time. So you don't actually retire when they say retirement.
You don't go to the beach, for instance, and just sit there drinking the
you
pina
still
coladas the whole
imagine
day.
you've been working since you were 25, so you're used to this, or maybe you're running a business, you're used to this, being active. So you don't actually retire from doing your job. You can still continue part-time, and you can also run a business. So it's just the idea that to make sure that the income that you are earning, you continue to earn that money at retirement. So you can still have your
plan
own.
for retirement without retiring.
You plan for retirement to make sure that you're going to live comfortably after.
But you're not retiring. You are busy with something else.
You're busy with something else, for sure. I think that's what I believe.
You're retiring from that particular job.
That particular job, you can go into part-time, because I saw it with my grandmother as well when she, I would say, retired. But she still was doing other things. She was still very active. She loved farming. So that was her job for her. So it's just keeping yourself busy when you say you officially retire or leave your employer or employment, but you're still, busy doing other things as well. Yeah.
Now, would you advise entrepreneurs to retire?
It's almost impossible, isn't it, for an entrepreneur to retire, because you're doing what you love. You're running a business. You have passion in this thing. So as a financial planner, I'm a very different financial planner. I encourage that continue doing what serves you, and you're making money, you're making a living. What we're wanting you to have is enough income to now sustain you, that you're not working as hard as you were doing 20 years ago.
And you work because you love it, not because
not
you
for
need to.
Exactly.
You're a bit like me. I mean, I do this podcast and things like this.
Exactly,
not
because
because
it's
I
your
have
interest.
to, because
Yeah.
it's my... Okay, I see
Yes.
where that is coming from.
Yeah.
Life cover. Who is entitled to life cover, and what are the things you look at?
Everyone is entitled to life cover, or an adult, not a child.
Yeah.
So anyone who is in employment, I would say life cover is important. Not only in employment, but when we look at your estate. For example, someone who's acquired a house from the bank actually forces an individual to have life cover, because going back to that credit score, etc., they want to know that you'll be able to pay this amount should anything happen to you, should you lose an income. So that's where you take life cover, you take disability cover, temporary disability cover. It's like taking car insurance. So should anything happen affect your income, we want our money. So anyone who is owing at the bank in terms of the house or car financing, life cover is very important, and it's one of the requirements actually when you do take out those particular items. Yes.
So just for purpose of the mortgage?
For the purpose of the mortgage, yes.
Okay.
And to also cover other estate fees, because there's executors fees, there's master's fees should someone pass away, and also you want to make sure that if God forbid disability happens or temporary disability, when you're not able to continue with your work, you're still earning an income during that time.
Yeah.
Yes.
Is that kind of life cover only for the duration of the mortgage, or does it extend beyond
It's
that?
whole of life.
Mm-hmm.
So life
Explain
cover,
that.
it's for, I'll compare it with disability cover. So disability cover you can take it out for up to 65. So you're saying that should I turn 65, I stop paying for these premiums in disability. But life cover is for whole of life. So as long as you're living, you continue to have it.
Okay.
Yes.
What is the best practices for entrepreneurs and graduate entrepreneurs, for that matter, to get it when and for how much and for how long? Is it got any bearing on the salary or the income you receive? Is there any correlation?
Definitely it does, because you're paying premium. So for entrepreneurs, I'll say as long as you are running a business, you've got a family or whatever it is that you're doing, going back to the house or a car situation, do take life cover. It is important, and it does affect your income, because not to say that you will look at income to give life cover. No, it's just, are you able to maintain the premiums on a month to month? So we look at affordability.
Okay.
Yes.
We want to talk a little bit about your setbacks and your before we talk about your triumphs, your failures, because you cannot be successful in business or in entrepreneurship without setbacks or failures. What would you say are your failures, and how did you recover from them?
This industry, you fail almost every other day. It is very challenging. And I would say one of mine was realizing that, selling is a very important thing in this industry, and you have to know how to sell. And it's not only selling a product, because many people have got into situations where they were just sold a policy and they didn't understand what it is. So it's actually I'm trying to convince you that I am credible enough, and you can take a policy with me. I can plan for your retirement. I can plan for your investment, because you're giving me your money to say, Liz, here you go. Not me per se, but the company. But I am the one who's representing the company. So there's a lot that goes into it. I faced my own and realizing that there are areas I need to work on. And this industry is very challenging. And also at the same time, you have other planners who are very competitive. So I faced that as well, because I thought I was supposed to just do my job, but there's a lot that comes with it. You have to be
So where was the failure there? Where was the setback?
The setback was losing a client because I wasn't able to close that deal, and it was very painful.
What happened? Give us more detail.
You want me to go
as
back
long
and
as you don't
cry?
mention names. No.
I will not mention names, no. It was a client that I was very nice on paper, you know, because we used to get leads. So you get this lead, and I was like, I'm so ready, you know, you plan for everything, what I'm going to say, how I'm going to present to the client, why I think life cover is important, why I think retirement is important, investment planning as well, and estate planning. And after doing the whole presentation, you know, said, because it's called a financial needs analysis, we go through the whole thing together, we look at the numbers, the client is with me. Until now, okay, so what are we going to do, you know? So I leave it to the client to now decide, as much as I've shared as much information as I can. I just said, okay, thank you, Liz, I'll get back to you. You know, and that was it was very discouraging, because I'd spent a lot of time planning for this presentation and trying to share with the client what I thought was important. So that was really something I sort of set me back a bit. But, you know, we don't dwell on...
Knowing what you know now, what would you have done differently?
I would say maybe I shouldn't have given as much information, you know, because we're having a conversation. So listen to the client more. That's what I've learned now, and I've implemented that now. I've got many success stories.
So what is the trick in sales that I mean, did you undergo a sales course? And if so, what did you pick up? What did you change specifically?
I would say just give enough, but not too much. So I'm trying, and not to sound so desperate, you know, because the other person on the other side can feel that, hey, you're going a bit too much here.
If you sound desperate, that's when you push them away. You
push them away, yes. So that's what I've learned. That was my biggest lesson on that, you know.
Any other setbacks? Any other failures?
I think it's just more about really structuring my work well, you know. So starting in the industry is very challenging. You're meeting big personalities and people who are, you know, they want to steal your client if they can. Yeah.
All right. Now, I'm from Botswana, obviously, as you know. Any plans to broaden your footprint to that area and, you know, beyond South Africa?
Definitely. I would really want to set up a financial planning firm for myself with my name on it, to going South Africa and beyond, you know, educating our people to help them understand the importance of financial planning home by home, educating every individual, every young person. South Africa, Zimbabwe, Botswana, all those areas I really would want to spread around, yes.
Okay, so we look forward to seeing you in Botswana.
Definitely.
Yeah. Let me just conclude with the issue of estate planning. What do you advise people to do in terms of putting a firm sort of estate succession plan in place from an estate planning perspective? Okay,
so I would say to those, especially those who are running businesses, it's very important to have a succession plan. So we look at all of that. Who, should anything happen to, or maybe you just want to rest now. You've been serving in this company for such a long time, you just want to pass on to somebody. So it's important to have someone that you are training or nurturing in that role, that they can take over. Maybe it's a son, it's a daughter, it's a nephew, whoever it is. So having
just an ordinary employee. It doesn't have to be a relative.
It can be anyone. So we look at a key individual within your organization that knows a lot more, have in-depth information on how to run the company. So you train that person going forward, and then they can take over the business should you want to retire.
What about things like wills and trusts and so on?
We also look at that, yes.
Yes, what's the advice there?
A will is very important, especially for those who are running their businesses, or even just an individual working. Have a will. Trust, many people think a will replaces a trust.
Yeah.
A trust is the tool within estate planning that we use. And it's not something that we I would say recommend unless an individual comes and says, I want to set up a trust.
Why don't you recommend it?
We recommend it. Well, it depends with the individual I'm dealing with, because trust comes with a lot of tax. So if, say, my tax bracket is 25%, trust is taxed at 45%. So now that increases your tax bracket. It goes up. So that's why I wouldn't say we look at the whole estate to see.
Are you talking about a living trust as opposed to a trust that is created?
Yes. When you create an inter vivos trust.
Oh, it's very expensive.
Yes, it is.
Is it better to then create a trust which will come into existence on your demise?
We usually said it like that, but it's only when we're drafting the will, then you can say, I want to have a trust as well.
You incorporate it
into the will. If there are any younger people, dependents, as long as they're younger than 18 and you feel should anything happen to you, we want to preserve the assets within the trust, and they can only get them when they attain a certain age.
And if you don't have any 18-year-olds, what happens?
Then you don't necessarily have to have a trust unless maybe you have a big estate that you want to be taken care of. Maybe you're in property business, or you have some form of business and you want to preserve those assets. You can put them in a trust. Okay. But a will is for everyone. Yes.
It's a must. I actually have a whole presentation on this. It's one of the things I speak on. You know, I do a fair amount of speaking. So using my 3-4 decades experience in the law, I share on this.
Yes.
Just something I thought I should mention.
No problem.
Now, what's the forecast for you if we stare into that crystal ball? What is the outlook a decade or two down the line?
Definitely to have my own firm, my own company. I love working.
How soon?
I love working with people. I've acquired enough now. I think I'll give myself maybe another year or two, then I'll be able to stand on my own.
Sooner the better.
The sooner the better, exactly. We'll learn along the way. Yes, I would want to have my own financial services firm.
Because right now you have the two side by side.
Yes. So if I can now put everything together, financial literacy there, I actually had a vision to have a school of my own. So imagine, as you mentioned earlier, incorporating financial literacy into the curriculum. So I can have my school set up in that structure. So that's one of my very big desires to have.
So you're working on it? How soon?
I'm working on it.
10 years, 20 years?
I will come back and announce.
You don't want to jinx it by mentioning.
We'll come back.
Okay. Getting out of the South Africa as well, you mentioned. Is that a firm plan, or is still...
It's still in the process, so want to conquer where we are first, then we can expand further. Yes.
Cool. Now this is where you get to ask me a question if you have one.
I do have a question. I know you're involved in a lot of things, but you have a background in law. Is that correct?
Yes.
I'm actually quite intrigued how you built your empire, should I put it that way, and you're also a writer. How do you balance, being that person who is so diverse in different areas, and what would you say to someone like myself?
I think the more important issue is one of harmony as opposed to balance. The difference in harmony is that you are not trying to equalize everything, and I believe that concentration creates wealth, whereas diversification preserves it. So the simple formula is to concentrate while I'm building a particular company, doing a particular thing, and then when it's established, I then diversify into other areas.
Awesome.
So that's how we do it. But for more juicy detail, you have to buy the book, because I talk about it. I even talk about a thing I call, my business philosophy. I call it the gentle giant. I break it down into nitty-gritties for you to understand. So I'm afraid you have to buy the book.
Definitely, I will. I will.
Yeah. Now, I want you to stare at that camera there. And as we wrap up our conversation, leave the viewer with an uplifting message, and also share all your contacts.
Awesome. To everyone who is listening, hello. Having a financial planner is something very, very important. And let's debunk the myth that you need to have a lot of money to see a financial planner. You can start from where you are and build your wealth from, where you are. I would say, have a purpose. When you have that idea of who you want to be or what you want to create, and now you have this roadmap, you have a financial advisor who is guiding you on what to do and how to do it, you can attain all your dreams. And to get in touch with me, you can get my email address. It's emachabahove@pps.co.za. You can also find me on LinkedIn as Elizabeth Machabahove and on Instagram as ebanda. Thank you.
Thank you so much. You've been very kind.
Awesome.
It remains for me, dear viewer, apart from thanking our generous guest, how she shared information so generously, to thank you for taking the time. Hopefully you've picked a few nuggets. And can I just remind you to grab my book from Exclusive Books, only $350. To strike that notification bell, please, if you haven't done so already. And to make sure as well that you subscribe. Hit the subscribe button as well. And thank you for taking the time out. Until next time, it's your host, Mompoloki Lerumo Mogobe, signing off. Thank you.